You're welcome to this tutorial. My name is SSEBUYUNGO Wilber, Kivekayunga. In this tutorial, we are going to see how we actually calculate pay as you earn and NSSF given the fact that we have the payroll with us. So what you're seeing here is the payroll. We are having the positions of the officers. We don't have their names, the basic pay and allowances. Then we are also having gross pay. We shall see pay as you earn, NSSF, and then later on we shall see how we get to the net pay. Now, to calculate any of the pay as you earn or NSSF, you need to have your payroll well arranged. So the payroll will have these positions, and also possibly if it was an organization we already know, would be having names specifically for those individuals, but this is generic, so we have positions. Here we have what we call basic pay. Basic pay is the money you will be paid if we considered that is the money you would receive before allowances. So that is basic pay. When we get basic pay and add their allowances and add allowances to basic pay, we get gross pay. So basic pay plus all allowances, we get gross pay. That's why you see that here we said in Excel, if you want to get a function or a formula, you start by typing there equals basic pay, that amount you select it, plus allowances, you select that amount you want, you enter. Now when you enter, for example, you've entered to spread that formula you've done here, or basic pay plus allowances, that's where you're getting your gross pay. You enter, you press an enter key, then come here where you see the plus sign coming on. When you hover around here, you will see up to the corner here, you see a plus sign, meaning if you hold it with the key of your mouse, then you drag it down, the formula spreads to all others. So you don't need to work for each and everything. You work on one and spread the formula to others by touching up there on the first cell, hold the mouse key and then drag downwards. It will spread everything down there. So there you will have got your gross pay by adding basic pay plus allowances. Now, to see whether we can actually get pay as you earn, pay as you earn is computed basing on the schedule that is provided by URA, a tax collecting body in Uganda. So this schedule here, I've copied the schedule right away for individuals, because we are dealing with individuals who are residents. Those are citizens of Uganda, the ones who are supposed to pay as you earn. For this case, we are going to compute for residents, those individual residents. So we are following the income tax rates for individuals for pay as you earn here, so that we use these to actually be able to calculate pay as you earn. So this image you're seeing here, I've copied this image. The data from it has been entered here in the Excel for easy reference. So the minimum, this has what we call the brackets, which have the minimum and the maximum, or the thresholds, which you can actually follow here. So the minimum, if you see, not exceeding 235,000 new tax rate, so it means that the minimum is 0. So from 0 to 235, that one will get 0. We don't have any amount we shall add there. But from 235,000 not exceeding 335,000, that's the minimum is 200 here. 235,000 to 335. We say we don't have any amount to add because they are not telling us to add, but we shall use a tax rate of 10%. So the very story has been done for the third range, which is from the third range is from 335,000 to 410,000. So there we shall add. We are saying you have 10,000 plus 20% of the amount by which the chargeable income, you will see that it will be the gross pay. They are talking about the gross pay. Then take away the amounts which will be exceeding the minimum, So we shall go to that detail, but here you will see that if it exceeds the 335, that amount exceeding 335, going above 335, that difference is that amount we shall use to calculate the 20%. So it means here that the other range was this range, or the last range A, section A, where we shall add 25% plus the 30% of any amount that goes beyond 410 shillings, 210,000 shillings. We shall use 30%. Any amount we find that such an amount has gone above 410,000 shillings. So any amount we shall find has gone above 410,000 shillings, we shall compute that difference between that amount and 410. We shall compute 30%. We shall use 30% with that difference between that amount going above 410, and then we shall use 30% to multiply with it, and then add back 25,000 shillings. 25,000 shillings. So we are going to get for an example here. For example, this person here, the security guard, is earning a gross pay, which is the gross pay here is 300,000 shillings. So in just computation out here, we can see that he's earning 300,000 shillings, but we find a range where does this person fall. Possibly 300,000 shillings is falling in this range of 235 and 335,000. So it is above the 300,000 shillings, is above the 235,000. So what amount is it above? We can see that equals to that amount. We can see what's the difference that 300,000 shillings is exceeding the minimum, which is 235,000. So we can now see that it is exceeding by 65,000. So it is, according to our rates here, we shall get this difference by which the 300,000 shillings is exceeding the 235 shillings, which is now the 65,000 here. We shall compute from this, which says here, get 10% of it is what the payers and that person has to pay. So we say, what is that amount? We select it, equals, select it, times 10%. What will it be? So this person will be able to pay 6,500 in pay as you earn. However, we shall use the if situation in the future, but this is for you to see how we actually interpret the data. so that when we are doing the computations using the if situation, you're able to follow through. Let's pick any other amount here. Let's pick an amount such as 1 million. The person is earning 1 million, for example. We come and again see where in this range and in these schedules or the ranges, where does the 1 million fall? We see, is it between 305,000 and 410? No, it has exceeded. Is it between 410 and 10 million? Yes, it lies between there, though it is more than 410,000. So it is just exceeding 410,000. So it is, but by how much is it exceeding the 410,000? You can see that we are in this condition here, exceeding 410. That is section A. So by how much is it exceeding the 410? We need to know that. That will be the chargeable amount. So to be the 10 million, take away 410. So the chargeable amount this person is going to be based on to get taxes is to get pay as you earn is 590,000 shillings. So this tells us that here what we do, they are telling us that if the person is within this range, this chargeable amount here, you get 30% of it. You get 30% from it. So we shall say, what is 30%? That amount, 590,000 shillings times 30%. How much would it be? We can now see that the amount from it is 177,000. That is 30%. Okay, it is 30%. But they are telling us on this amount we need to add back 20. We need to add on it 25,000 shillings. So let me just do it in the sides here, and say equals that one, that 177,000 shillings plus the 25,000, 25, to see how much pay as you earn this person has got to pay. So now you can see that the person is going to pay, this driver is going to pay as you earn of 202 shillings. Okay. Now this is the story that we apply to each and everything here. The task you have is to make sure that you identify what are the ranges, and then you're able to tell what is the range in which someone's salary, which we are calling here gross pay, lies. Then from that, that's where you say what is the minimum, or the minimum rate, or the minimum, that is the minimum or threshold. So from the minimum, we say, for example, this one had 1 million lying in the range of 410 to 10 million. So the amount that is going above the 410 is only 590,000 shillings. So from this is now what you call the chargeable income. The chargeable income. This is the chargeable income. The amount that has gone above the minimum threshold, the minimum. So that one, you now charging it, you multiply it with the rate. But where they tell you plus 250, this is 25,000 plus 30% of the amount, by which chargeable income exceeds 410, it means that after we have computed the 30% from the chargeable income, we shall have to add the 25,000. Or the other way is the 25,000 plus the 30% of the chargeable amount. Okay. So now from there, this is our draft work. This is just for draft. This is our draft work here. I've just kept it here as our draft. Now, while we are going to compute our pay as you earn for everything, we don't need to invest our efforts to calculate for everyone here, like we have done, where we calculated for the one of 300,000, this one, and then afterwards we came and calculated for the one of 1 million. No, you need to do for one person. For example, if we did work and did a function or a formula for the chief operating officer who is earning 5,500,000 shillings in gross pay, then to compute pay as you earn, we can use the if situation, the if condition. So we should be using the if condition because this is not basic computing or basic calculation. We are using the if condition where we shall be working for one. For example, you'll be working on one, and then that one person you work on will work for all others. We'll just spread the formula to all the others. So we are going now to enter into the if function. I've pre-typed here the if function. What I have done is that I have started from the bottom, following this schedule from the bottom here, that any amount that is above 10 million, the person will have to be charged 10% on that amount that is above 10 million. But also, the person will also have to pay because he has already met the condition here of having 10 million. Anybody with 10 million, between 410 and 10 million will have to pay 30% on that amount that is above 410,000 shillings, then plus 25. But anybody who is going above 10 million, yes, will have to pay the money for being above 410,000 shillings, but also pay additionally, will have to pay 10% for going above 10 million. I think you get that. This is the situation here that we have as section B, where the chargeable income of an individual exceeds 10 million. Okay, for example, it is 15 million. An additional 10%, additional to what? To the previous situation. Okay, which previous situation is the one he has gone above 410. So that amount he has gone above 410, which is already known. If it is 15 million, he has gone above 1 million, has gone above 410 million by almost 1 million. Has gone above 410,000 shillings. So that's the difference between 10 million and 410,000 shillings. Then after having been charged the 30% plus 15%, this one tells us that any amount he has exceeded 10 million. So for example, he is paying 15 million. That extra 5 million, we charge it 10% and add to the other that he had exceeded 410,000 shillings. So if we get that concept, then here we can now flow and come here and see how do we treat that in the if situation. That's why we see here that I say if what? If this gross pay, that is the money that person is earning, is greater, this is 10 million, is greater than 10 million, this is the sign for greater than 10 million. You just say shift greater sign, shift the greater sign on your keyboard, then type 10 million, comma. If this amount, you select D3, is now the serial number, is greater than 10 million, comma, then what does the computer do to compute the tax there? Okay, let the computer say this D2, this amount here, how much of it is, we are following this situation here to create the if condition. We are following this situation here where you see 410,000 shillings to 10 million. Yes, the difference, if this person was earning some money which is greater than 10 million, then we would get that money. We are saying D, we just select that cell. We shall get that money. Take away the 10 million to see. Okay. Take away the 10 million so that we see how much is above 10 million. Then that one is what we shall be multiplying with the 10% here, the 10%. Remember, we are following this situation which we have summarized here. Then we shall multiply it with 10% to tell that that amount that has gone above 1 million will be multiplied by 10%. Okay. Then after that, remember that going above 10 million is also going above 410,000. This condition. So if someone that has gone above 10 million has also gone above 410,000 shillings. So that person will pay for going above 10 million, but will also pay for being above 410,000 shillings, but below 10 million. So for that case, we come here and say D2, that money, we select this cell. We base on one cell. We keep referring to one cell. We say D3, yes, we select that D3. Then we say if it was going above, it is above 10 million, then that D3 amount, which is above, we shall be getting the difference. It has exceeded 410. Okay, it has exceeded 410,000 shillings. What's that difference? That difference is what will be the difference above 410,000 shillings. So this person will have to pay a 30% rate. So we multiply that, we use these brackets very well, because this one means that the 30% is multiplying the difference between D3 and the 410,000 shillings. So that is the 30%. But remember, we have to add 25 shillings. 25,000 shillings. 25,000 shillings. So that's what we are adding on here. We've added it here. Remember that in this situation, this person is going above 10 million. By going above 10 million, we'll have to pay for that amount above the 10 million, which is D3, minus the 10 million. The numbering here depends on the cells in which you are using in your computer. You may have another D number, another cell number, but you keep referring to that cell number. So it has exceeded 10 million, 10%. Now the other one, for exceeding 410%, for exceeding 410,000 shillings, we compute it and say that D3 minus 410,000 shillings. The rate we use is 30%, and then we shall add the 25,000 shillings. Okay, that is now for a person going above 10 million. But what of someone who is below 10 million but above 410 only, has not gone above 10 million but is below 10 million but above 410? So that person will have to say D2. If D3, for example, we selected here and say D3, this one, you select it and say if it is greater than 410,000 shillings, you just base on the minimum here. It is greater than but also equal to 410,000 shillings. Then we get that D3, we get that amount. We take away the minimum, which is 410, and then that we get, we shall multiply it by the rate of 30%. We are on this situation of section A here. We shall multiply it by 30%. But afterwards, we add 25,000 shillings. That's what we have done here. Okay. Then we go to another level, this other range in this bracket here. We say if bracket, remember these ones we are just typing them. If, you can just type them. You can type if bracket, then say if this cell, please you base on that very cell, so that you base on one cell, you compute for one cell, it works for all the cells. Okay, so D3, if D3 is greater, we are on this range, this one here, is greater than 335,000 shillings, greater than 335,000 shillings, what do we do? What should the computer do to calculate? The computer should take this action. Should get that amount, the D3, okay, D3, take away, we are saying D3, take away the amount which it is exceeding, which is 335. We type it there. Type it. You type it there. 35,000 shillings. Then the rate we shall use is 20%. We use a rate of 20%. After getting that 20%, we shall increase by adding 10,000 shillings. Remember that we are in here, in this area of the schedule. This area of the schedule is where we are here. So then after that, we come and go to another range, this other range, where a person's gross pay is above 235,000 but below 335,000. We are on this range, this one, where the person is going to be paid, charged 10% is the summary here. So we say if D3 is for this is greater than the minimum 235,000 shillings. Is greater than or it is equal to it. Meaning you begin from it and go above it. Okay, is greater than, according to the questions we have, these ones are usually greater than, not equal. Yeah, allow me to remove the equal because they are saying exceeding that amount. Exceeding meaning greater. Yeah, we shall use greater, not equal to. We shall have removed the equal to because it is not starting from that very amount, but an amount greater than it. Yeah, we can organize that. Okay, so we are on this situation, the almost the last one, where we say if D3 is greater than 235,000, what should the computer do to calculate? Let it calculate the difference. That amount it is exceeding 235. So we select and say that amount is the amount which we will find in this gross pay minus 235,000 shillings. So that difference, we use these brackets so well because this bracket works with that bracket. Okay, then times 10% because the rate is 10%. That one now is the 10%. Now do you see this other bracket is a bracket I have added here corresponding to this other bracket so that I am able to write another situation. Then after that one, now this if situation is working for this range, we are going on the top one. Otherwise we only need if it is not lying between what we have said, then it will be 0. Nothing will be added. The other person can just say, instead of putting an if situation, this is the only one remaining, you can just say 0. Otherwise 0. Nothing, because you are not going to add anything. You can just say comma 0. Then after that you enter. By the way, what you need to note is that these brackets, to put these brackets very well, you count the number of ifs you have. We have 1, 2, we have 3, we have 4. If, then you put at the end, you put these brackets. For if 1 you put, if 2 you put, if 3 you put, the if 4 you finished. So each if should have a bracket. Then you say enter. So it means that this is the tax that this person is going to pay. So you can spread it downwards by touching that corner. Spread the formula downwards so that it computes for everything without necessarily going to compute for each and everything there. So that is pay as you earn. You need to have your schedules ready here, your brackets here, the ranges ready for you to guide you in setting the if formula. So that's why I said if D3 is greater than 10 million, let the computer say D3, that amount in D3, then take away the amount for which it is going above it, D3 minus 10 million, then to be making it 10%. then plus, because the person is also going above the 410, plus that D3 amount minus 410, the rate is 30 plus 25,000 here, 25,000 there. Then you go to another if for the other range. If D3, this amount, D, the cell, the gross pay, that specific amount there, whichever it is on your Excel, it can be on another D, it can be on another cell number. Yeah, you select it, you just select it, you select that amount, you keep referring to. Even this one, we are going to remove the equal is greater than 410. Okay, it's greater than 410. Now at least this person is only lying in this range. That's what we have done. Yeah, we are saying is exceeding 410. We multiply it by 30%, then add 25%. Then we go to another range, which is this range or this bracket. If that person was lying there, we said D3 for this case of this Excel I'm using, then that is D3 is exceeding 335. Then we get that amount, that D3, take away 335 times 20% plus 10,000. Then you go to the last, to the other one, which is it is exceeding 235,000 shillings. We say that D3 take away the amount for which it is exceeding, which is 235,000. We multiply it by 10%. There we are not adding any amount, so we have not added anything. Then otherwise, zero elsewhere, because the other amount which is below the threshold of 235, it will be 0. You enter and then pull the formula downwards, so it will have taken care of all the conditions. So you can see that it has even computed for us what we did manually here. For 30,000 gross pay, the person pays tax of 6,500. For 1 million, the person, it has already calculated here, the person is paying 202,000. So we don't need this. I'm going to delete it. We don't need it. It was for us to practice. So now we are going to NSSF. NSSF for the case of Uganda, the rates for NSSF, there is NSSF for the employer and NSSF for the employee. Employer is the 10%, employer, and then for the employee, it is, employee is 5%. Why we say NSSF 10% is for employer, is for the setup of Uganda, is that the employer will have 10%. For example, here will have to contribute 10% to the employee without necessarily deducting that 10% from the employee's gross pay. So the employer will contribute this money from other sources of the company other than the employee's gross pay. Will contribute that money to the employee, but it will not be deducted from the employee's gross pay. That should be very clear to you. So though we compute the 10% from the gross pay, we shall not deduct it from the gross pay. The employer has got to get it from other sources other than reducing the employee's gross pay. That's why the 10% for employer is just an added advantage to the employee who has registered for NSSF. The company tops up 10% for you, yet it will not reduce your gross pay because of the 10%. But it is computed on that gross, basing on the gross pay, though it is not deducted from that gross pay. So we are going to compute 10% from the gross pay. To compute it, you say equals gross pay. You select that amount you are basing on times 10%. Times 10%. Enter. The percentage is got by pressing shift, and then number 5 has the percent there on my keyboard. So enter. So you see that now the employer will have to contribute 550,000 shillings. That's the 10% of the 5,500,000 shillings. After doing that, we can even pull down. Remember what we did is, if you've done it, you come to the corner there, pull down. It spreads to everybody. So the 10% of the 30,000 shillings of the gross pay is 30,000 shillings. That's the 10%. Okay. Then for NSSF of employee 5%, we do the same, but only that we know that this will be affecting the employee's earning by end of the month, because that money the employee is saving it from her own money, her own gross pay, to NSSF. Let the employee also save, but let the employer also pay for the employee the 10%, but let the employee also save. So here let's see, it will be equals to this base amount, gross pay, times 5%. Enter. That's the 5% the employee is going to pay, 275,000 shillings that month. So let us also go to the corner there and pull down. Other people double click. Other people simply come here, and where the plus sign has come here, double click. That also works. You double click, it also works. Now when it comes to what we call net pay, net pay is the amount of salary a person is going to take home after deducting pay as you earn and also deducting NSSF. Good. So this gross pay, we shall say it is gross. The person would have received here gross pay, yes, but he's not going to receive all the gross pay because there are deductions. So this pay as you earn and the NSSF are called deductions. If I put here another column to say how much are the deductions from the employee. Some others include here what we call the advanced payment, but we are not going to configure that in our image here. So our deductions we shall have to make for this employee equals pay as you earn will be deducted from the gross pay. Okay, we shall be deducting it, plus, remember, deductions from the gross pay are only for this case will be pay as you earn and NSSF of 5% for the employee. That is only what is going to come as deductions. So it will be pay as you earn, then plus NSSF 5%. So that is the deduction that is going to be done by the company. The employee is not going to receive this money in the pockets, because some of it is going to go to URA through the pay as you earn, and the other part, the 5%, is going to go to NSSF in addition as an employee's contribution which will be added to the 10% to take to NSSF. So for this case, you will see that now deductions are, the two deductions will be that amount, so that the employee is not going to receive it. What the employee will receive is what we call the net pay. So net pay will be the gross pay minus the total deductions. Okay, net pay minus all the deductions. So that's the formula, equals gross pay, you select that amount, take away, you select the deductions. I'm clicking there, enter. You can double click or just spread down. Let me just double click. It goes to spread for everybody. So you can see that the security guard who was having gross pay of 300,000 shillings, in pockets is the security guard is going to take home 278,500 shillings. Why? Because the 15,000 is going to NSSF due to the 5% contribution by that employee, the security guard, and also the security guard is going to pay the 6,500 going to URA, pay as you earn, or any tax board of your country, Kenya Revenue Authority, Tanzania Revenue Authority, or any other country's revenue authority. But the scale we are using here is the Ugandan scale for URA, Ugandan Revenue Authority, and then NSSF, National Social Security Fund for Uganda. So you can now see the deduction for this security guard will be the 15,000 shillings plus the 6,500, making the total of 21,500 shillings. So that's how we calculate the net pay. But at the end of the day, end of the month, you need this summary here. This summary, I've developed it. Let me delete it. You may need this summary by just saying highlight up to here. You keep dragging to highlight up to the end, and then I'm going to say sum. Let me just unveil the top ribbon. Okay, just to unveil the top ribbon, show the tabs and the commands. Good. So I am just saying I've highlighted it there, then come and say sum, auto sum. I'm selecting sum to say total. The above I've highlighted, just highlighted, then went up here and said sum. Said sum. So to do for all, you sum up there. You can also sum one by one, summing what you want to get the total. For pay as you earn, you come there and say sum up. NSSF, you come there, say sum up. If you want for all, you select and say sum. You highlight all here and say auto sum. It comes. Even if I wanted gross pay here, I can auto sum it. If I wanted also basic and allowances, I can also auto sum them, so that there is a sum for everything. So pay as you earn total, you see the pay as you earn total, I've just said equals to the total I have got there. But if you wanted it, you can also sum all that is above there to get pay as you earn. Then NSSF, you see NSSF that will be contributed in total by the entire company is the sum of the employer 10% and the employee 5%. So it is a total of the employer plus that of the employee of 5%. So that's how we can go about this. In case of any question, you can use my number is 0704054977. That is on WhatsApp, or the one that is not on WhatsApp, 0788054977. That's not on WhatsApp. I want to put that 0 there, and then put a quote, or put that so that it comes out. Okay, and also put a quote here, that is 0, so that it can be read. That apostrophe as well. So I thank you. My name is here. Let me type the name. My name is SSEBUYUNGO Wilber Kivekayunga. That's my name. SSEBUYUNGO Wilber Kivekayunga. That's how we can go about it. Thank you for your attention. You can keep practicing as you follow the processes we have undergone. The tutorial can be of help to you. Thank you. Have a nice time.